Hey everyone, hope you're all doing well and welcome back to another Sunday Sessions video. Now this week I'm going to be starting off on the AUD to US dollar currency pair. Now as you see on the screen, through the blue text, so I always use blue text when I'm talking about structure, we're looking at a current downtrend, some current bearish structure from this point in the market where we set a high. We have been trading down since then, breaking the lows, setting lower lows and then setting lower highs from the retracement. So as we move forward, I am expecting price to continue doing this because in the higher time frame scheme of things, we've recently just tapped into a supply zone, had this distribution and are now reversing, so there should be plenty of supply in the market to keep trading price down to a final target much lower. So moving forward, we are literally just looking for sell positions to hold longer term. Obviously there's going to be some intraday trades that we can look at buys into supply zones, but my overall outlook is for price to remain bearish. So with that being said, I have a zone here. So this is going to be the last buy to sell, just with the assumption that price will trade back up, mitigate positions in here and then continue lower. Obviously, we just need to analyze how much demand is introduced into the market. This move down shows that there is a lot of supply currently, so it may be unrealistic for price to want to trade all the way back up into this region, just because it will struggle to introduce enough demand to do so. So what we're going to do is we'll drop down the time frames, look inside of this impulsive wave down and see if there's anywhere else that could act as a point of interest. Okay, so now that we come down, we could arguably refine this supply zone to the area in here. So I'm going to mark that one out inside of the overall zone. Now the reason why this looks nice to me is because ideally this is pretty much the last unmitigated zone. So this move up comes to mitigate positions up here. And then this move around here seems pretty efficient. There's no inefficiency. So to me, that's the one that I'm checking. Whereas as you see here, we have a heavy push through with some volume introduced to the upside. And then straight afterwards, we have some market inefficiencies where we see a straight drop, no real retracement. So they're pretty much the parameters I'm looking at when it comes to identifying a supply or demand zone. As we look through this wave, there are some more positions that could act as points of interest. This being one, this area being another. As I stated, it is simply going to be a case of analysing the supply and demand balance to determine how much demand is going to be introduced. The more demand that is introduced from this move, the more likely it is that price will be able to trade higher and mitigate those zones higher as well. So the reason I'm choosing this one is just because this high volume candle does come to clear some of that intermediary liquidity. This would have been a lower time frame, small bearish run, and this move up actually disregards or manipulates that lower time frame bearish run. So that is quite clear institutional control to me. Straight after we've had that high volume push up, we've reversed the market and then a high volume push straight back down. So I'll be looking at these two zones. Obviously, as you see on the screen, I've got an alert set at the higher one. I'll now set an alert here at 0.73327. So now I have this alert set. All I'm going to be doing is waiting for one of the alerts to ping, looking for sell position. So that's going to be either a fractal displacement or a distribution in the market, and then just looking to ride price down to somewhere where there is a final target. So imagining that price now reverses higher, obviously this would be the low set. Because we're in bearish structure, we'd want that low to be penetrated. So wherever the market low or the swing low is set, just looking to have the take profit there, and obviously partial along the way. So now just looking at the US dollar to the Japanese yen market, pretty simple analysis here. It has been in a very heavy bull run as of recent, but we had some displacement, some breaks of structure. Obviously price had this heavy move down. Since having that heavy move down, I identified 3 supply zones, all of which price has reacted to, which is quite a strange scenario, but nonetheless, you see each time it has reacted, we have been able to get a winning trade out of it, because say we executed a position here, we would have looked to ride that down to final target here. Say we executed the position here, we probably would have looked to partial at these structural points with a final target or take profit down here. So we would have got out of that with maybe a couple RR after partials. And now finally again, we've had another reaction from the third supply zone, arguably just waiting for a displacement around this level, so 128.13. if we actually draw that on with a line tool, in my eyes, the second we displace this low, or if we displace this low, that's when I will then start looking for some longer term sells, because the second it penetrates that, obviously it confirms some short term bearishness. Now in my eyes, this entire move back up is a retracement, so the next impulsive wave down should exceed this level here, around about 127.45. The reason I quite like this move as well is because you'll see in this region we have a lot of liquidity build up. If I just use a box tool here to actually highlight that, a lot of rejection from this region, so this is obviously a technical level of resistance. And the reason I like this move is because we've signified another tap or reversal from said resistance line, and straight after that we've had a high volume push through which has come to mitigate this zone. The reason I like this is because that is one of the main parameters we're looking for when it comes to institutional control. We want inducement and momentum. What that means is that we create a level where price is being induced to react from, and after having so many reactions and building so much liquidity, we then see them finally execute a position here to blow through that liquidity, also having the purpose of mitigating this position, and then straight after that they're now more than likely going to be looking to execute some sell positions because they've exceeded all they needed to do on the upside. So all they can do from here is just pump into sell positions. So trying to be involved in any sells from this moment on, given that the correct confirmation is delivered, does seem wise to me. So as I stated, I'm going to be setting an alert here, which is around about 128.13. And I'll just be waiting for the displacement to be delivered. If so, we'll then start looking lower time frames for some sell positions. Now I wanted to come on over to the crude oil market, just because price is finally delivering the way that I wanted it to. I'm not sure if you remember back in March, we did have a really good sell position on this, which ended up running at 1 to 10, so gaining 10 RR back. There were partials along the way, so it wasn't a 20% return, but it was still a very profitable trade. I'm not sure if you remember in one of the Sunday sessions prior, I was looking at this zone. I was expecting price to be quite aggressive in this bearishness, react to this region, and then make a move lower. However, price did unfortunately blow through that. However, since then, it seems that we've reacted to something inside of this level. This region really acting as support and resistance technically. But since then, we see that price has made a move lower. It's displaced this low, and then it seems to have reacted to a supply zone that was left over. So we could start looking to initiate shorts. I'm going to be waiting for this low to get broken, giving me that final confirmation that we are bearish. If that is the case, we can just look to find some sell positions, some decent sells, all the way down to the final target to continue the bearishness that is in place. So that would be around 92.9. That sort of region is where we're looking to ride sells from. So as of right now, I'm going to place an alert at 99.79. I'm going to be waiting for price to break this low, look inside of this region for any supply zones to look to sell from, and then obviously wait for price to deliver, find entry confirmation, and then look to ride that down. Now when it comes to the pound dollar and the euro US to the dollar, then I am just going to be patient with these because we've had very heavy drops. If we actually open up my watch list, we'll see that both the pound US dollar and the Australian dollar to US dollar had some heavy hits. Now, I'm going to expect that it may take a day, a couple of days for these markets to recover. That doesn't mean we cannot trade them. It doesn't mean that trading opportunities are going to be very slim. It just means that the market could be rather unpredictable or rather unfamiliar to more of the beginner traders who aren't used to this environment. So I'm just going to be cautious, not going to be too aggressive, and just make sure that I'm not trying to overtrade, not expose myself too much, because in times like this, keeping your psychology in check and managing your equity, managing your risk is crucial. But with that being said, that is going to conclude my segment. As always, make sure you are in the learning lounge. Keep updated with this analysis, with the way that both myself and Luke are looking to tackle the markets that we cover. This is honestly a great idea to anyone who is just wanting to take some trades or wanting to learn, because we provide so much information there completely free of charge. But with that being said, I will now pass you over to Luke, who's going to run through some of his own markets.
Thank you, James, for the analysis there. You provided some very informative points, and it'll be nice to see how price plays out in the coming week. Now moving over to my analysis, we will be looking at three pairs today. So I've got the Euro USD, I've got the Great British Pound to the New Zealand dollar, and I've got the AUD to the USD as well. Now, what I'm going to do is go over my bias, give you my reasoning for my bias, and things that we can look out for and ways we can look to capitalize on these pairs in the market this coming week. Now, if you do go on to enjoy the video and you believe it's helped you in some kind of way, don't forget to leave it a like. All the feedback and support is very much appreciated. And if you have any feedback or anything you want to say, by all means, leave it in the comments below and we'll be sure to read it and reply to you as soon as possible. Looking at the euro US dollar, we can see how the market has been predominantly bearish. So, throughout this period, we've been wanting to look for those sell positions. We always want to trade with the trend and not against it. This is one of my number one rules. Coming to present time now and looking at price, it is actually approaching a large area of demand. Now, price can do one or two things at this point. We can either see price reverse, going bullish, setting new highs, new lows, and hopefully going on to set bullish structure on this higher time frames, or price can actually approach this demand zone and still be outweighed by the supply that's in the market, and we would see new lows getting set, new lower lows and new lower highs, and this bullish structure on the higher time frame structure would in fact be invalidated. Now moving over to the 4-hour time frames, we can see these swings a little bit more clearly. You can see how we have clear lower lows and lower highs being introduced into the market. This is showing clear bearishness. So now zooming in a little bit at more present time and the way the price has been playing out. So we can see how a high was set here, creating a new low. In bearish structure, we expect those lows to be broken every time and the highs to be protected. As we've seen, we've actually had a break of structure. This high was broken. So this is our first indication that price could be moving bullish. There could be a potential reversal inbound. On top of that, we have just recently had a low set that has actually come higher than the previous low. Again, this is building our bias that price could be moving bullish. A potential reversal could be inbound. And on top of that, we are actually approaching a large level of demand. If we go down time frames again, what I would like to see is a break in bearish structure here. So some kind of displacement, a break of the highs going bullish. If we get that, I will be looking to enter in on those long positions. Now, my take profit would be set just below this high here, because we know that price can trail back up to this point and still be within this bearish structure on the higher time frames. So our take profit would be protected. I would have my stop loss set at a structural low, set below a structural low. Therefore, that structure is holding and protecting our stop loss from being activated, and we'll just leave price play out and do its thing. Once price comes to break above this, it will take a retest. Once that retest has taken place, we have signs of bullishness, the end of the retest and the start of the next impulse. That's when I'll be looking to take my position. So if we just draw a path, we would see price come up, break that high. This confirms bullishness. Price would come down, retest, and then go on to set new bullish structure. So if price delivers what we want to see, we could look to enter somewhere around here. We would have our stop loss just below the structural low that's set, as this is protecting our stop loss. And then, as I said, we zoom out a little bit, I would in fact have my take profit. I could have my final take profit set just below the structural high that was set from this bearish impulse on the higher time frames, as we know that price could realistically trail all the way back up before then taking its next impulse and actually breaking these lows, keeping this bearish structure that has been presented to us on the higher time frames. As you can see, we would have a crazy risk to reward return on this trade, a 26 pip stop loss with a 344 pip take profit. This can generate us with some lovely returns, a 1 to 13 risk to reward. If we're risking 2% of our equity per trade, we could look at gaining back 26% plus. Okay, so now moving over to the Great British Pound to the NZD. As we can see, price produced us with a BOS here, a break of structure, since we have seen a bearish swing be produced. Now price has actually presented us with another break of structure, so signs of bullishness. As we've seen, we've had clear highs and lows being put into the market. We have our swing low marked out here, our swing high marked out here. My predictions for this market are that we are going to see price continue this bullishness, not breaking this high, showing some signs of displacement and a break of structure somewhere around here, and then go on to set new bearish structure, breaking this previous low. My overall bias for this market is to be a seller, but we could take full advantage of a buy before the heavy sell. As I say, the overall structure of the market is actually bearish. It's creating lower highs and lower lows. Price is currently retesting. So if you did want to take advantage of those buys before the sells, get involved. Look to obviously enter in on the market just before the new impulses started, the end of the previous retest on the fractal structure. And then once price comes up to this area, I will be looking to close those positions and be awaiting for another break of structure and signs of bearishness on the higher time frames in order to activate those sell positions longer term. Now, finally, moving over to the AUD USD. This was a pair that I actually analyzed for the clients last week. I gave them two potentials of how price could play out. As we can see, potential A played out perfectly, so we can get rid of potential B. Now, what are my thoughts for this coming week? Well, obviously I suggested we could enter around here, take full advantage of those sells, and you would have, profited quite well from that. Now we are approaching a previous higher low that was set in the market. So price could do one of two things. So we just get rid of this. Price could either approach this area, show signs of rejection, go on to set bullish structure, or price could come down to this area, actually break this structure and continue setting bearish structure. Now if it does that, then we would be looking at a longer term sell positions, as this would invalidate the bullish structure that has been created on the higher time frames. The overall structure of the AUD USD market is bullish. It's creating us with higher highs and higher lows. So realistically, we do want to be buyers in the market. So my predictions are that we will see rejection from this point and a continuation in bullishness, in which case we will be looking for those buy positions as soon as we have confirmation that, the bullish impulse is underway, and I'll be holding those throughout, hopefully breaking this high here, and we'll see new highs get set in the market. Alternatively, if we don't see that and we see price actually break this low here, I will be waiting for some kind of retracement. Again, we could look to buy before the sell, so we could look to buy in the retracement, and then once we have clear evidence that price is then going on to take its next impulse down bearish, we'll look to get on those sell positions and hold those longer term. We have certain areas and criteria that need to be met in order to jump on these positions. If they don't play out, and if price doesn't react well to these areas that we have set, then I'll be looking for those sell positions. This is the beauty of being able to trade reversals and also trade the continuation of a trend. Now it's all about waiting and being patient and waiting for price to present a clear entry for our positions. If you aren't involved in the Learning Lounge group chat, we say this every single Sunday, but get yourself involved. It's completely free of charge to join, and we basically show and share all of our analysis for the coming week, as well as update you guys on how we're performing, the trades that we're placing. It's just a brilliant way to log our progress and get involved in the trades that we're also actively placing as well. Now, I hope you've enjoyed this video. Again, if you have, please don't forget to leave it a like. And if you haven't subscribed already, be sure to click the subscribe button. We upload videos every single Sunday, our Sunday sessions videos, and then we alternate a Wednesday and a Friday. Our Wednesdays are Learn to Trade videos, and our Fridays are our Trading Couch videos, where me and James talk about random subjects and topics. Now again, thanks for watching, and we will catch you guys in the next Sunday sessions video.